In this video, I'm going to give you the trading strategy to end all strategies. It's the simplest model that I've created after 5 years of trading, and I'm giving it away to you completely for free in the pinned comment down below with a full PDF, with screenshots, with everything that you need. And all I ask in return is that you simply like and subscribe. Okay, so for this strategy, I've made it as simple as humanly possible, right? Like, it does not get any more easy than this in terms of trading. So what you're going to do is you're going to get on the 4-hour chart, whatever market you trade, because this works on every single market that you can imagine, right? So again, I always say this, but if you can find it on TradingView, right, if you can type it in and find it on TradingView, this will work. Doesn't matter whether you live in Nigeria, India, Turkey, US, doesn't matter where you live, this will work on whatever market, your native currency, your native, stock market, it will work. But what you're going to do is you're going to mark out the most recent fair value gap in price action. Now, if you don't know what that is, go look at this nice picture on screen now that I've made for you. It's a very simple pattern, right, that forms in price action. But what you're going to do, and the only thing we really need to do on the 4-hour chart is just mark out the most recent fair value gap in price action. Now, there's no complicated daily bias. There's no, weird top-down analysis. That will help. That'll obviously add to the win rate. But for this strategy, like I said, I've made the emphasis on this strategy is simplicity, right? Making things as simple as possible. So we have this 4-hour fair value gap right here. The only thing we care about as traders is we want to wait for price. Now, remember, this candlestick here forms the fair value gap. All we care about now is once this fair value gap's formed, and when I say formed, the moment this candlestick closes, we have the fair value gap, right? We've got this high here, this low here, this gap is our fair value gap. So all we care about as traders is the moment the fair value gap, at the moment the price enters into the fair value gap. That's all we care about as traders, right? And the moment price enters the 4-hour fair value gap, we want to get onto our lower time frames, and then we want to start looking for confirmation that we're on the right side of the market, because let's just delete this little arrow right here. So this fair value gap is a bullish fair value gap, right? It's bullish. However, if you just randomly start, entering on the 5-minute or 1-minute chart and then hoping and praying that price reverses, that's not good enough, right? Because where are you going to put your stop, right? Price would come all the way down here, fill in the entire fair value gap, and if you entered up here, you're going to be in for a bad day. You're going to get your stop hit. So we need to see some sort of confirmation that we're on the right side of the market. But in terms of the 4-hour chart, we're done, right? There's no more daily bias, no more top-down analysis, no multiple time frames. All we want to do is mark out the most recent fair value gap and then wait for price to hit the fair value gap. Now that price has done that, and the moment price starts to hit this fair value gap on the 4-hour chart, you're going to get down onto the lower time frames. Now, this will work on every lower time frame. And when I say that, I mean the 1 hour, the 15-minute, 5-minute, 1-minute, even the 30-minute chart. Some guy was having a lot of success with that. Like, whatever time frame. Again, you're not guaranteed to make money in trading. I have to make this very clear because the YouTube new policy. No one's guaranteed to make money in trading, but you get the point, right? Choose whichever one's best for you. Backtest whichever you think. For me personally, if you're gonna ask me, hey Atif, after 5 years of being in the markets, what do you recommend? For me, the 4-hour and 15-minute charts are so easy. It's hard to go wrong. It's very hard to go wrong just using the 4-hour and 15-minute charts. So that's what I would recommend. What you're going to do, right? So what we're going to do. So this is the 4-hour fair value gap. This candlestick here, and I think this one all the way over here. This is the big, juicy 4-hour fair value gap. Now, what we want to see is we want to see price hit the 4-hour fair value gap, right? This time we're on the 15-minute chart. We want to see price hit the 4-hour fair value gap, shoot off, give us a retracement, and then ride price up, right? That is what we want to see in price action, because that is our confirmation that we're on the right side of the market. Do you remember how I said before? Let me just delete this. Do you remember how I said before that we can't just randomly start entering as soon as price hits the fair value gap? I know you get away with it here, but like, where would you put your stop? Would you put it here? Would you put it here? Would you put it here? Like, where would you even put your stop? And let's just imagine you were like, oh, Atif, I'm just going to do it like this, right? For whatever reason, right? The guru online said 50 pips or whatever. It's a 50 ticks will be fine, right? And then price comes and does this and goes off, right? We need to see some sort of confirmation that we're on the right side of the market. This is why I'm a big believer in not using, turtle soup. For those who don't know, turtle soup is as soon as price takes out stop loss orders, you just not randomly, but you just buy and sell instantly. For me, I always like to see confirmation because that is the highest probability setup. So confirmation is a very strange word, right? People think, what does that mean? What does he really mean by confirmation, right? You hear these guys online saying it, I want to see confirmation on the right side of the market. What does that even mean? Like, there's a very simple mathematical way of saying that, right? And remember, this is a bullish 4-hour fair value gap, pretty obvious to tell with this big candlestick here. The easiest way to see confirmation is to wait for a new fair value gap to form on the lower time frame, right? So remember, on the 15-minute chart, Now, again, let me ask you a little question here, right? So this is a little quiz for you. So if this is a 4-hour bullish fair value gap, do we want a bearish fair value gap to form or a bullish fair value gap to form? Which one would be confirmation that we're on the right side of the market? Right, hopefully you said bullish, right? Because again, if this is a bullish fair value gap, what we really want to see is price shoot off, leave a new fair value gap, enter on the new fair value gap, and ride up. The new fair value gap is essentially the new bullish fair value gap. Is price telling us, smart money telling us, hey, look, we're on the right side of the market. More likely than not, price is going to shoot off. So this right here is your new fair value gap. And what you're going to do, mark out the fair value gap. I mean, look how beautiful that is, right? I mean, I know people don't like the term beautiful, but it kind of is, right? Price almost basically fills in the entire gap. I know it goes off just a tiny. Let me just do this properly, right? Basically fills in the entire gap. Goes off a tiny bit here. What are you going to do for your entries? Now, your entry, for your stop loss, it's not like a liquidity sweep. You don't have to put it at this low here. But the minimum you have to do is put it at this low here. Now, I'll put up the picture of the fair value gap again. If you look at the picture, you'll see a fair value gap is 3 candlesticks. So when you're bullish, you always want to put it minimum at the low of the 3 candlesticks that forms it, right? So the minimum you want to put it at is at this low. You can, if you want it to be really safe, have it at this low, but this low is more than sufficient, right? So that's what you're going to do. And then for your take profit. Now, before we talk about take profit, this is something that's really interesting. If you spotted this, well done. If you didn't, absolutely fine. We're going to talk about time of day, right? We're going to talk about time of day because some people might be going crazy. I think, what the heck? This is 7:30 p.m. Eastern, right? Asia session's 8 p.m. Eastern. So normally, and this is really important, right? So you want to get your notepad out or just pay attention to this, right? So the highest probability setups will always be during a major session, right? The major sessions are London, Asia, and New York if you're trading Forex. And obviously for the Dow, you have the indices open, which is 9:30 to 11 a.m. Eastern. And of course, you've got the PM session, which is 2 p.m. to 4 p.m. Eastern. These are major sessions in price action. The high probability setups will always be there. However, you can trade outside of the sessions. This is the massive takeaway because I've had loads of people messaging me saying, hey, Steve, like I've been backtesting this strategy and I got an insane win rate, but it was outside of London, right? It was before Asia session. Like, I get these insane win rates, but like I'm not trading at a key time of day, or I saw a winning trade, or I have so many setups. This is the key takeaway, right? If you only trade during the major sessions, you will have a higher win rate, but you will have but you will have less trades, right? So if you trade during a major session, you'll have a better win rate, but you'll have less trades, right? You will not be trading as much as someone who trades whenever they see a setup. If you trade whenever you see a setup, you will get way more trades, but you're going to have a lower win rate. So it's a trade-off, right? It's a delicate trade-off. So you've got to ask yourself, and this is where backtesting comes in, right? Sometimes people ask me like, hey, Steve, what's the win rate for Dow? Can you backtest it for me? Like, this is where you come in as a trader. Would you rather, now answer this like honestly, would you rather trade less, be more patient, have a few days where you don't trade, but when you get into your trades, you have a very high probability, not 100%, but you're high probability of winning? Or would you rather have a trade almost every day, but the win rate isn't as good, right? This is where you as a trader have to make that decision. So normally for me personally, if you want to ask, Atif, what do you do? I always wait for a session, right? I always wait for a key time of day. However, I know there's plenty of traders who just want to take action, not in like a bad way, but they just want confirmation that the strategy actually works, which I 100% agree with. And if that's what you want to be, then by all means, go and do that. But this right here is an example of how you can use a strategy outside of a key time of day. And I'll show you with the price action. You can kind of tell and see here how it's kind of a bit off. But what you would do is you target 3 to 1, just like that, which you just about get. And you can kind of see, can't you, right? You enter and the price is kind of lethargic, not as strong as it should be. I mean, compare this to all the way over here, which is indices open, very strong and very aggressive. But, at the end of the day, you will decide which one do you prefer, right? Would you rather have less setups and a higher win rate, or would you rather have more setups and a lower win rate? That's up for you to decide. But again, you've got the full strategy in the PDF, in the pin comment down below. And if you want to see more examples of me using this at key time of day, make sure you go check out this playlist on screen now.